GKFX Prime presents the Market Analysis Webinar.
Hello traders, and welcome to this week's weekly analysis video where I'll be taking you through the high probability setups in the marketplace for this week. And this week is the week beginning 16th of May 2022. My name is Dima and I've been a day trader and also a swing trader for the last 5 years, and I'll take you through the markets for this week, some opportunities that I've spotted, and we can go through them together. I've got a selection, we've got some Forex majors, minors, we've got the S&P, Bitcoin, and also crude oil. So let's just go through them one by one, and I'll show you what we're looking at in the market this week. So let me start with the euro dollar, the usual favorite. All we can see here is that we've got this major low point from 2017 and the recent drop in the euro dollar on the monthly. If you go down to the weekly, we can see that the market has just missed this level last week. We just went shy of it. So still expecting the market to hit that and possibly even go through that. And I'm going to expect that to happen next, this coming weeks, if not in the next couple of weeks. So with that in mind, if I can go down to the daily and the 4-hour, what am I looking at? Well, at the moment, you can see that the price moved off this swing high and came down to here and bounced off. And we're now leaving behind this support resistance level and this gap in price right here. So we've got the market moving off, and we've got an area that we can work off where we can see that there's a possibility for the market to move off from. So I'll be looking for a short of this level to come down into this 1.03 mark and to hit that target, and from then on we'll see what the market does, because that will be creating a double top in the very, very large time frame, and we'll see if the market then bounces and comes up a bit higher, and we'll see what happens from there. Now, there's also a possibility that we're going to go straight up and break through that. And if that's the case, then I'll be looking for this level higher up and then to short from here to take that low. And we'll see what happens when price action develops here. We may see a little bounce, some consolidation, and then the actual drop. I'll have to see how price action develops at the time. So first scenario is here, and the second one is right here. Once the market does touch this level, then the probabilities drop, because what happens then is that we have an uncertainty. We don't know if the market's going to break right through that or it will bounce from that and then go higher. So we'll have to see as that develops. And the price action will tell us that. Now, the fact that, if I just zoom in here on the 4-hour time frame, the fact that we've got this large drop indicates that we do have selling momentum to the downside. And even though we've got this kind of engulfing reversal, pin bar type reversal pattern, here is still the pressure, the momentum clearly to the downside. What I can also do is draw a fib from this obvious swing high to swing low, and I can see that here we've got the halfway mark, so that is the kind of the equality, the equal level of price, where below we've got the cheap and above we've got the expensive area. So anything above, especially above the 61.8 level or anywhere over here, is the nice expensive, better price to sell from. So that's why at the moment preferring that area, and that is the higher probability, and we'll see what happens when the market gets there. Okay, so that's the euro dollar for the week. Now let's move on to the other major. I'll go to dollar CAD. Again, I'm gonna zoom out And what I see here on the dollar CAD is I could see a nice series. If I just zoom in, probably the weekly would be better. A nice series of, you could see lower highs right here and higher lows, I should say. And here we've got higher highs and we've got a higher point right here that has developed. Now, we can see that the market has moved off this level right here. And I'm just going to mark that out like that. So with that in mind, and with this level in mind as well, if you can see this obvious level, and with the market having closed higher than the previous week, last week, even though we've got this big rejection, there is still some bullishness. If I go down to the daily time frame, and we've got this point of reference right here, expecting slightly higher prices, I'm looking at this level right here as the next target. What I'll be expecting is to see a nice cheaper price before heading higher. So what would be a cheaper price? It would be taking this low as a reference point, and again, can draw a fib. Take the Fibonacci here, see that the market has hit the 50 level right on this kind of loose support resistance type of zone, even though it's not very accurate. And again, the better price would be the nice cheap price below the halfway mark. So I would like to see below the 61.8, and that would be a nice kind of zone to enter the buy. So perhaps a drop. And if that happens, depending on what the price action says, we'd see a nice reversal, some momentum on the lower time frames, 4 hour and even the 1 hour lower time frames. And then once that happens, with a drop, and then we'll see that reversal, and then we'll coming back to take this high. Now, if that doesn't happen, then we'll have to see as the market develops. The market may shoot straight up, and then in that case, we've lost the edge, we've lost that cheap price, and the chance is gone. We'll have to let the market go. But otherwise, I would like this the price to be somewhere here. This is the higher probability setup in my eyes at the moment, and I always like to look for that lower price, because then we're really getting nice risk reward, and it's worth taking it. So trading is all about risk management. You're a trader. If you're a trader, then you're a risk manager first and foremost. So that's where we're at here. Yeah, and that is the dollar CAD outlook. Now let's go on to the next one. I'm going to go to pound yen next. So I'm going to go to the Forex miners. And if I look at the weekly, what do I see? Well, if I look at the very big time frame, you can see that the market again is creating these higher points right here. We've got higher lows and higher highs. Again, the market looks to have been created this swing. Now it's going a bit higher. If I go down to the weekly, again, we've got this protracted move. The market has made its momentum move, a very large move right here. So I've got these two as the reference points, these two reference swing points. I drew a fib, and we see that there is a rejection again on this level combined with the 61.8. So therefore, together with this gap in price, which the market has not come back down to, but it just has last week and rejected and created this week, I would look to see a rejection of this level again somewhere around here, and then coming back up higher into a higher price in line with the current trend, daily trend, weekly trend. So at the moment you can see that we had this rejection right at the end of the week on the Friday, and the Friday reversed the whole week. So we may see possibly, we'll see what happens with the price section, but possibly some range some consolidation, and if we get another attack of these lows right here of this week, then of course that would be market will be coming back to a better price, and therefore it'll be more favorable, more probable that we'll get a bounce. If we do get a bounce, again with price action back up to right here as the first target, first swing point, because this is a swing, there will be stops left over here from sellers, people who have been selling here, and then the next port of call will be right here at the top, 168.4. Okay, so we're kind of already showing signs of rejection of this level. It would be nice to have a kind of a double bottom, or even more, we may see price breach that. Will be even better because we get an even cheaper price, and then even higher probability of the market coming back up into the expensive area up here. Okay, so that is the pound yen setup. Let's look at the next one. Let's look at pound New Zealand next. Okay, pound New Zealand, I'm going to look at the weekly again. Now, let's just move this along a little bit. You can see it's quite messy, quite difficult to read. But what we can read is that we can see this move, this whole move right here. It's a very, very powerful weakness, powerful down move in the market. So extreme weakness, very big candles, and then broke this low right here after this whole range that's been going on here. So what I'm looking at this move is that this whole move, considering how powerful this was, and now we're moving back up slowly, that this whole move is a retracement. Now the question now becomes, where are we likely to retrace to, and how far could we retrace? Well, again, you could measure this whole move and look at what's going on. So we've reached the halfway mark, 50%, and the next point where the market is likely to reach to is the 61.8. So obviously, if we're going to take the continuation down on the higher time frame, then we'd like to continue that from the expensive price, and the expensive price on the higher time frame on the weekly is the 61.8, which is the 1.98 mark. So we're looking to move higher into that, to draw into that. If I go down a time frame, I can see once again higher lows and lower highs being formed. You can see that here, these points. Yeah. So now that I'm expecting to go higher, if I look into the chart, what do I see? Can see this major swing point from here down to here, and now we can see this consolidation. The market is consolidated recently. Now what do we want? If we want to buy, what do we want to do? Well, we want a cheaper price once again. So where is that cheaper price? Well, the cheaper price is below the halfway mark, which is 50 here, and obviously the 61.8 would be great. So anywhere below the 50 around this zone would be price that it makes sense to buy from. Let me just delete this just for clarity, just so it doesn't cause you any confusion. And if we do get once again a drop, and then the market creates some kind of reversal in this area, some kind of price action, and then a quick move up on the lower time frame, 4 hour or 1 hour, then that would be the favorable option. So we've got the target as this high, and then beyond that we don't know what's going to happen. So that will be the first target, and then we'll see what happens. If you want to leave a runner, you can see this swing point here where there's probably stops residing. There's liquidity, and we've got a major point here, swing point. That will be the next point of call, should we continue higher still. But we'll see what happens. Again, the market could do anything. So we could see, you know, the beginning of the week it'll drive straight up, and then if that happens, then that's invalid. Okay. This is to ignore. We don't want to buy at a high price. We don't be chasing the market. We want to let the market come to us and then see what happens. So that is the preferred option on this case, on the pound New Zealand. And let's see if that happens. If it doesn't, so be it. It'll be one of those trades. It is what it is. Okay. Euro Aussie is next. Once again, I'm going to look at the weekly time frame, and once again, similar situation with pound New Zealand, isn't it? We've got, if I take this move from high to low, I can see that the market has reacted of the 50% once and the 50% twice, but we're not gone down yet. And in fact, if you take, let me just zoom in for a second to this chart. Right, let me zoom in. What I can see based on the weekly is that here is the closing price. If you just pay attention to the closing for a second, here's the closing price of last week, and here's the closing price of previous weeks. So even though we have this wick right here, and this shows some rejection of the 50, we still close higher. So there's still a little bit of bullishness. So I'm still expecting a bit of bullishness, possibly to come back and take out this high, and go into the 61.8 level. I'm going to couple that with this area right here, and I would expect this area to be attacked, this area to be breached before the market continues on its down move. And I'm looking again, once again, this huge, powerful move down, and that is indicates where the direction is going to me for the moment. So let's look at the daily and the 4 hour. Will be a better time frame, a bit clearer price action here. Again, I'm going to do the same as before. I'm going to take the swing, this obvious major swing from this low to high. But first, I'm going to just delete. Let me delete this Fibonacci, because otherwise it's going to get confusing, isn't it? Okay, I'm going to take these lines out as well, just to clear this up a bit. Again, Fibonacci from the low to the high, and I'm going to see where we're at. So below the 50, I like the 61.8, and below that, I also like this zone right here and this low, because this is an obvious swing low. So there will be stops here, and this gap in the market, this price gap, where the market has not come back down and reached into that price gap yet. You can see this huge move. So should it do that, then once again, I would like to see a reaction of this zone right here, and then back up into these highs. That will be a target. If that happens, there'll be higher probability. So all of these are probabilities. Remember, all of these are scenarios, possibilities, and should they happen, then we'll look to take a trade. If they don't happen, then we have to reassess the situation. So always, I like the market to come to me, and if the edge is there, then I take it. If not, then I ignore it. Just have to accept whatever the market tells us. Again, manage your risk. It's all a game of probabilities. Just reminding you that in case you've forgotten. Okay, so that's the Euro Aussie trade. Okay, so that is Forex. And I'm now going to move to the S&P. Let's go to the index. And I'm again going to look at the high time frame weekly chart, look at last week. What do we see last week? Well, you can see another close, weaker close with the previous weeks. We're clearly now in a downtrend. We had this swing broken, this structure point broken, creating a lower low here. We had another lower low here broken, and we had another low broken right here. So we're very firmly to the downside now. Yeah, there's no not much argument about that at the moment. We're coming down. So now the question becomes, where do we come back down to, and where do we want to sell from? So let's look a little bit more closely at the next structural points to target. So we've got this point here. So if we do short, we want to see we've got a nice risk to reward ratio. So that's what I'm going to check for. And I see that here. And then if I just see the next one will be down here or down here, and then down here where we've got a gap in price. So these will be the targets for a short. Now the question is where to short from. Let's go down to the daily. Now on the daily, what do I see here? See, the market made several moves down. We've got a nice move right from here as a reference point. move down, and if I draw a fib from this recent high to the recent low, I can see that the 61.80s here above the 50 would give me this zone right here to take a possible short from as a higher probability. And should the market breach that point, I would like to see as an edge some kind of accumulation here, a range before the market begins its move down. So it will slow down here and then come down. Should it breach this level, this zone, then the next obvious zone is this gap in price right here that the market hasn't traded into. So we've got two scenarios here. We've got two probabilities. Now, obviously, it'll be much better if the market reaches this part right here, because then we've got a higher price and we've got a higher risk reward, and there's a higher probability that the market will drop from there. But the only thing to do at this moment is monitor and see what happens. So, gonna have a look. For me, this is the opportunity. Always like to wait and see what the market produces before actually making a decision. And the price action will tell you that. Let's see how it goes. Let's see what happens. Lots of uncertainty going on apart from all the technicals on the chart. So yeah, this is something to bear in mind. But again, reminding you again, manage your risk. This is just this is not advice. This is just an idea. These are just trades based on one particular edge. So make sure you manage your risk and make sure you are trading within your limits. So that is the S&P idea. Next, I'm going to move to oil and see if you can spot why have I chosen oil as a possibility for this week. Well, if I look on the weekly, once again, very clear to see a uptrend right here. Now that we've got that uptrend, bear that in mind. You can see this level right here where we've got multiple rejections of this level, lots of wicks. Yeah, which indicates that this level is the rejection zone to hold. And again, if I go to the daily time frame, once again, we got higher lows and higher highs, and we've got this massive candle right here, big engulfing candle that rejected off this retracement, which came down here, and then the market is continuing on its upside. Now, if I look for a target, where is the market likely to reach to? This is the first obvious port of call. Obviously, we've got this high right here, which it looks like the market is gonna reach very soon. So I'm going to look at this zone here, and then in the future, it will be this high to take out the high and reach even higher, because we are within the structure of the weekly higher time frame. So now that I've got that perspective in mind, gonna go down to the 4 hour. Gonna just reduce this so as you got it clearly, a little bit more clean charts, clean up the charts. Got nice clean charts to work from, no mess. So got this price point here as a target, and once again, if I look at the 4 hour, what do we see? We've got this reference point here where we moved from, so we should not be breaching this point anymore, unless if the market then goes into a range and continues on this range right here, and it continues to accumulate and reaches close, very close to here, then, you know, that is, the probabilities have massively reduced then, and we're now no longer, the edge won't be present as much anymore. So where can we place that buy? Well, I can see a level right here of support resistance. I can draw a fib on here at the current, where we're currently at, and match it up with this level. However, the market can continue upwards and create a double top and then retrace back down. So you want to see as a deeper retracement as possible, and then we'll see what happens from there. And obviously you want price action in this area, and then some confirmation to see where whether the market does want to head higher and go higher, or it's going to collapse further down. And the next level to be interested in will be right here. So I prefer obviously this level because it's a much cheaper level than it is here. However, we'll see if that happens. It might not. There's another possibility for the market to do this, to head much higher. And if we just miss this level, bearing in mind this is what we're targeting, then a retracement back down to this area, to this level, support resistance, if you like, then this will be the area to look for a high probability buy from. And then this zone right here, which you can see, this swing point, I should say, right here this week will be the reference point, because then should the market breach that, then we are no longer in a high probability buy, because we may more likely be in a range. Right. The other thing to note, which we can look at, is this. You can see this trend line as the market broke through it, came back down, did not close below the trend line. It just went higher still, created another higher high right here. That adds more to the argument of the upside. So again, that's just an idea, and it's just a possible edge that we can see at the moment. So that's crude oil. And lastly, but not least, everyone's recent favorite in the last few months, Bitcoin. And what do we see on Bitcoin? Well, it's an interesting one, isn't it? Because last week and the last few weeks, in fact, we've had a massive drop, took out many, many buyers. It's been an absolute killer for anyone who's buying Bitcoin at the moment. So here's what I see for now. Bitcoin took out this high, which created a fake high right here. A fake breakout, I should say. Gonna just mark that. Oops. It's a fake breakout, and now we continued to break lows, as you can see right here. And it broke another low here, and now we're clearly coming down. We've got lower lows and lower highs, and we're breaking down. Now, with that breakdown, I would expect that the market comes down further. We've got a major figure of 20,000 around about here as the next point. Where is 20,000? About here. And then that will be the place where I'd look for the market to reach to next. And consider that it's now breaking these structures as well, taking out the buyers, liquidating many positions, and money is being transferred. So with that sell bias in mind, where are we now looking to trade into next? Well, you can see that huge move last week, a massive drop. Really scared a lot of people, I imagine. What am I going to do? I'm going to take again the swing point, draw the fib, and I can see that the middle point is here on the 50, and we've got that gap right here, and above the 61 level, and this zone would be a point of interest for me, and that will be a short. And if the market breaches this high, then I'll have to reevaluate the situation, because then this will be breaking major structures, and this whole downside move will not be what we think it is. So much better price right here, zone to short from, and this will be a high, and then coming down into the 20,000 type level, and continuing on that weakness. If I go down to the 4 hour, we could see that we had this wick here, but it wasn't this candle here, that rejection, but it's not very strong. So again, what we could see, there's another possibility to actually buy Bitcoin into this area right here, but the higher probability edge for the buy would be if Bitcoin came down further, the market went further, created this double bottom, or even further than that, went even further, rejected that, and then went higher. So something like so. If it happens, no idea if it does, then coming back into here would be the buy. But that would be very short term, it's more risky, and it's not in line with the momentum of the market. So bear that in mind. Again, manage your risk. And remember that it is all a game of probability. These are all possibilities. This is all just one kind of edge. So that's the outlook for the market. We've got 8 markets here. Pick your opportunities carefully and make sure that you always manage your risk and do not trade more than you can afford to lose, of course. Be responsible and good luck in your trading week. Thank you for watching. My name's Dima, and thanks for being here. I'll see you on the next week's analysis video. Thanks very much. Have a good week.